Support and resistance levels are foundational concepts in technical analysis and are crucial for anyone trading Forex, stocks, or other financial instruments, including cryptocurrency. These levels act as psychological barriers on price charts, where the price tends to pause, reverse, or break through. Recognizing and understanding these levels can dramatically improve a trader's ability to predict price movements and plan trades very well. Now, what is support? Support is a price level where a downtrend tends to pause or reverse due to a concentration of buying interest. It acts like a floor. So support acts like a floor. It supports something. Something is coming from up. Price is coming from up. Then the support zone will support it, will not allow you to go beyond this point. Just like I'm recording now, everything you are seeing stop here. So this is like the support. So the market is coming down, it supports. Then the market is going up. This area now serves as a resistance. The market eat it, then it start coming down again. It eat it again, start coming down. In the case of support, the price is coming down. It eats this place, this line, then it comes up. If this line again comes up, if this line again comes up, it can happen several times, and that support is a point that if the market is able to break it through, it can continue and break, going down, down, down. If it's unable to break it, it can go up again and hit the resistance. So there is a support and there is a resistance. So support is a price level where a downtrend tends to pause. So a price is coming down, then it tends to pause or reverse due to a concentration of buying interest. So many buyers are at the support level. So when the price is coming down, sellers are in control. They get to that point, buyers are there buying. So they push the price up, or they make the price not to go down beyond that support. The support acts like a floor beneath the price, preventing it from falling further temporarily. When price approaches a support level, buyers find the price attractive and enter the market, increasing demand. This buying pressure can stop the price from falling further and sometimes trigger a price bounce upward. However, if the price breaks below the support line and price breaks below, it may signal a continuation of the downward or the downtrend and the creation of a new support level lower on the chart. Now, support levels can be identified by previous price lows or clustered buying activity. Now, let's talk about resistance. Resistance is the opposite of support. So here we have support down part, then we have the resistance in the upper part. So resistance is the opposite of support. So this resistance is up, support is down. So it is the price level where an uptrend, the price is going up. So the uptrend tends to pause. So at this point of the resistance, the uptrend tends to pause or reverse due to concentrated selling. So at the resistance level, many sellers are there. So they will push the price down or make it to pause. Now, it serves as a ceiling that caps the price temporarily. So the resistance serves as a ceiling, the support serves as a floor. You can write that down. When prices approach resistance, sellers become more active, increasing supply. This selling pressure often stops the price from rising further and can cause a downward reversal. A break above resistance is typically considered bullish, signaling potential for further upward movement. The moment you break that resistance, it goes up and then it can continue going up except you find another resistance up there and then it will stop at that point. Resistance levels can be found by observing previous price levels or areas where price repeatedly fails to advance. So you can find an area Price got to this point, it came down. It got to that point, it came down. It got to that point, it came down. That point is a resistance. Price got to this point, it went up. Price to this point, it went up. Get to this point, it went up. That point is get to as support, and going up can serve as a support. Resistance levels can be found by observing previous price highs or areas where price repeatedly fails to advance. How support and resistance work. Support and resistance are not exact numbers, but rather they are zones where buying or selling pressure intensifies. Price may test these levels multiple times. Candlestick shadows or wicks often show these tests. Now, the more times a support or resistance level is touched without being broken, the stronger and more significant it becomes. Round numbers, e.g. 1.2, 1.5, often act as strong support or resistance due to trader psychology and order clustering. Now, how do you trade support and resistance? Traders generally use two main approaches. Trading the bounce is the first approach. So you buy near the support. You know that the support, it will bounce up. So near the support, traders will wait for the price to come near the support and then they will buy, because they believe that that support will be holding as support, so it will not allow you to go. So they will buy at the support. That is one level, anticipating the price will bounce up. Then they can also sell near resistance. This is resistance. Price go there, it come down. Go there, come down. So when it's approaching resistance, they want to sell, anticipating that the price will drop. Another way is to trade the breakout. Traders buy when the price breaks above resistance. I said it before. When the resistance is here, price wants to bounce on it and go down. Now it breaks it, and then gives us some candlesticks that show that the trend is breaking up. Then you buy. That's the breakout. So you buy when the price breaks above resistance, expecting a strong upward move. Then the traders also sell when the price breaks below support, expecting a strong downward move. So this is support. When the price breaks below the support, so the traders sell. But when it bounces, they buy. When it breaks into the support, they sell, believing that there's a downtrend move that is coming. For confirmation, traders often wait for candlestick patterns or technical indicators before they go on to decide. Now, how to identify support and resistance levels? Number one is using the horizontal lines. You draw at historical highs and lows where price consistently breaks. So there's a price high or there's a price low. This is the low, this is the high, this is the high, this is the high. That high, you draw a horizontal line. This is a low. At this point, it bounces back, it bounces back. You draw a line. When you get like two of such point, you draw a line. So that line, if it's below, is the support. That line, if it's above, it is the resistance. Now, apart from this, traders also use diagonal support or resistance by connecting ascending lows or ascending highs. That is what we refer to as trend lines. Then traders also use moving averages. These are dynamic support or resistance following price trends. Then they also use technical indicators. Price trading volumes often coincide with support resistance levels. Now, let's look at the importance of support and resistance. Number one importance is recognizing support and resistance helps define entry and exit points. It enables proper placement of stop loss and take profit orders, provides insight into market sentiment and trend strengths. It also aids in managing risk and reward efficiently. Now, let's go on to look at the summary of this material that I've spoken to you about in Forex, which is support and resistance. You see, if you understand support and resistance clearly, you will not have much problem in Forex trading. Support and resistance levels are essential building blocks for understanding price action. They mark where market and participants collectively decide to buy or sell, causing pauses or reversals in price movements. Skillful traders use these reversals as guides into making informed trading decisions and improving their overall strategy. In the next video, I am going to be talking to you about trend lines and channels, and I believe you are going to benefit immensely from it. Please, let's keep following on, and then we are going to see a lot of things that we are getting from this introduction to Forex and how to trade Forex series. Please, before you go, I want to subscribe on this channel if you have not subscribed. Like this video if you have not liked it. Share the link of this video with your family and friends, and drop your comment and question in the comment section below. This video popping up by the side from my channel is the next one I want to go ahead and watch now. I will see you in the next one. Have a good day.